All right, if you're a small business owner, listen up. This is your official 15-day warning. We're going to break down some absolutely critical year-end tax strategies from Black Ink Tax Services. And trust me, these could save you a ton of money, but you've got to act fast. So today is December 15th. That means we are in the final stretch before the tax year closes for good. Seriously, every single decision you make in this little window, it directly impacts what you're going to owe the IRS. But the good news is, the most powerful moves you can make are actually the simplest ones. Forget about trying to find some magic loophole in April. That's not where the game is won. Your most impactful tax moves are happening right now. The timing of your income and your expenses before New Year's can literally change your tax bill for the entire year. It's all about timing.
Okay, so our first big strategy is all about controlling your income. Now, I know that sounds complicated, but it really just boils down to one simple thing: being super smart about when you get paid. And to pull this off, you just need to understand one basic accounting rule. So most small businesses, probably yours, run on what's called a cash basis. All this really means is that income doesn't count when you send an invoice. Nope. It only counts when the money actually physically lands in your bank account. And that one little distinction, it's the key that unlocks a massive year-end advantage for you. So, with that in mind, what's the number one mistake business owners make in late December? It's hitting send on that invoice way too soon. You know the feeling: you finish a huge project, you're excited to get paid, and in that excitement, you might have just accidentally jacked up this year's tax bill. Just look at this. Look at the power of waiting just a handful of days. If you send an invoice on December 20th and you get paid before the year is over, that income gets taxed in 2025. But if you just hold that same invoice until January 1st, well, the payment lands in 2026, and you've just legally pushed that tax problem off for a whole year. And what's the result? Boom! By pushing that income into next year, you immediately lower your taxable income for this year. Your 2025 tax bill shrinks. It is a simple, 100% legal way to manage your cash flow and keep more of your own money. All right, now for strategy number 2, which is really just the other side of the coin. While we're pushing income into next year, we can pull next year's expenses into this year. This is all about smart spending to max out your deductions right now, when it counts. So, this brings up a really common question I hear all the time. To get that tax deduction before the deadline, does the cash actually have to leave your bank account? The answer, well, it might surprise you. The answer is a big, fat no. And honestly, this is a total game changer, especially for anyone who's watching their cash flow at the end of the year. You do not need cash on hand to lock in a deduction for 2025. And here is exactly how you do it. We call it the Credit Card Accelerator. First, you figure out what your business needs: equipment, software, supplies, whatever. Then, you buy it with a business credit card before the year ends. Now, here's the magic part. Even if you pay that credit card bill in January or February of 2026, you get to claim the entire deduction on your 2025 taxes. Now, you might be asking, wait, how is that allowed? Well, the IRS rule is actually really simple. The expense is counted on the day of the transaction, the moment you swipe the card, not when you actually pay the bill. It's not a loophole. It's just using the system exactly how it was designed. Now, using a credit card is usually the easiest way to do this, but there's another great option. It's called the Mailbox Rule. If you simply mail a check to a vendor by December 31st, that secures the deduction for 2025, even if they don't get around to cashing it until January. Both of these are super powerful tools for your year-end planning. Okay, so we've covered the 2 core strategies, right? Defer income, accelerate expenses. Let's pull this all together into a final action plan you can actually use over the next 15 days to really seize control of your tax situation. So here it is, your final checklist. First, go through your completed jobs and hold off on sending those invoices until after the new year. Second, make a list of everything you're going to need to buy in the next few months. Third, buy that stuff now using a business credit card or by mailing a check. And doing this is so important because it can directly lower that estimated tax payment you have to make in January. Look, the bottom line is this. It's not about avoiding taxes or anything like that. It's just about smart management. It's about making sure you don't overpay and that you keep your hard-earned money working for you and for your business where it belongs. The deadline is firm, and the opportunity is sitting right here, right now. You have the strategies. The only question left is,
are you going to use them to take control?